Well, many consumers are already worried about the future of the economy, and the conflict between Iran and Israel is adding fuel to the fire.
Phillip Shaw from Goldstone Financial Group is here to break down how the global uncertainty might affect people like you and me. Thanks for being with us, Phillip.
Thanks for having me.
All right, so let's get right into what kind of impact are we seeing on Wall Street?
Well, so far, the market hasn't really seemed to react too much to the war. Even before we had the peace treaty signed on Monday, the market hadn't reacted all that much. These kind of things tend to be short-lived at best when it comes to the economy. And so far, we have some optimism. It seems to be a peace treaty. That said, if it goes the other direction, I'd expect at least short-term some volatility. I'd keep some of that long-term planning in mind. Like I said, the market so far this week seems to be doing just fine.
Yeah, it's been interesting to watch. Okay, when these kind of things happen, people always worry about the impact on gas and oil prices. Do you think this is going to have an influence on that immediately?
I think there's a pretty low likelihood that, we see things like, are they going to shut down the Straits of Hormuz and all this? I think it's a pretty low likelihood. If they do, we'll see some gas prices and that sort of thing come up. I will say the bigger issues will end up being, what does the U.S. economy look like broadly? How is the Federal Reserve going to handle rate cuts this year? And ultimately, what's going to happen with tariffs, I think, will be your bigger issues than what's happening right now with Iran.
All right, let's get specific. What kind of overall impact, I guess, could we see on the U.S. economy?
So specifically from the war, if we see an increase to oil rates, that's going to affect everything. It could be a resurgence back in some inflation. Obviously, oil prices, lead to higher gasoline prices, leads to higher shipping prices, leads to higher costs across the economy. Again, those tend to be short-lived, and they tend not to have, broad-reaching long-term impacts. But short-term, I'd say it's always prudent to, make sure you have enough in a savings account, make sure we put some money aside, because if it goes poorly, we want to make sure we're not caught in a lurch and, on the wrong side of it.
Yeah, now you partially answered this question, but any other bits of advice, what would you give to one of your customers, say, if they're saying, I'm not sure what to do, I've got retirement around the corner, or do I need to get out now? When you're faced with this uncertainty, what's your advice?
So my biggest piece of advice, keep that long-term planning mindset, but as goals start approaching, especially when we start talking about retirement, we say, hey, if I'm a few years out from retirement, it's just prudent to take at least some of your money off the table, start putting it into things that are going to be more fixed, things that you can have reliable income from, reliably draw from. But most people, when you're looking at retirement, you're talking 20, 30 years. It's still a good idea to keep that long-term mentality in place. Make sure you're focusing on your financial goals. Make sure you're focusing on the planning.
All right, Phillip Shaw from Goldstone Financial Group. Appreciate your time and your expertise.
Thanks for having me.